The following is a presentation of TFNN.
Next up, we're going to go to Florida, Titusville. Nick, thanks for hanging on the line. How you doing today?
Hi, yourself, sir?
I'm doing well.
Ken, I want to say I'm 84 years old, and the way you explain things makes it very easy to follow.
That's very nice of you to say, Nick. I appreciate that very much.
Have a good day, sir.
All right, you too.
Live at TFNN, Breakout Investing, with your host, Ken Shreve.
Good afternoon, everyone. Happy Monday. Welcome to another edition of Breakout Investing on TFNN. Ken Shreve with you as I am Monday through Friday from 3 to 4 p.m. Eastern Time on TFNN, just ahead of the Tom O'Brien Show. 877-927-6648. That is the number to use if you want to give me a call, talk about these markets. If you can't listen to my show live, I always remind you, you can head over to iTunes and pick the show up as a podcast. And don't forget to check out TFNN on your smartphone. Very easy to listen that way as well. Just open your smartphone browser, type in tfnn.mobi in your smartphone browser. You can listen to the stream that way as well. If you want to look at charts live right along with me, you can do that with Tiger TV right on the homepage of TFNN.com. It's also viewable on your handheld device as well. Channel 1, the show is carried live. It is archived on Channel 13. All right, a little bit of volume in the NASDAQ today. We are... on Friday, we had 1.76 billion shares trade on the NASDAQ composite. We're tracking about 10% higher than that today. Check in on the NASDAQ composite here. We'll see that the tick index it's trading in the probably the top third of its range here, definitely in the upper half of its range. It is up 24 points, 0.8% gain for the tech index to 2995. So decent day for the NASDAQ, really for all the major averages. There seems to be some progress being made regarding fiscal cliff talks on Capitol Hill. S&P 500 up 11.5 points, 0.8% gain there as well to 1425, and the Dow Jones Industrial Average, 30 components here, big blue chip stocks. It is up 65.5 points, 0.5% gain for the Dow to 13,200. All right, bonds under pressure again, pretty big time today, sending the yield on the 10-year note up to 1.76%. The 30-year bond also higher to 2.93%. Dollar, last check, mostly unchanged at 79.58. Gold up $1.20. Not much movement, but a $1.20 gain to $16.9820, $1,698.20 an ounce. Oil up 47 cents to 87.20 a barrel. Taking a look at the XLF today, Financial Select Sector Spider Fund. It is outperforming nicely, up 1.7% today. You've got some decent volume in there. Looks like it's going to come in nicely above Friday's level, but a 1.7% gain for the XLF to 1627. As you can see, not far from a breakout at all over 1640. So is it possible? Could the financials continue to lead the market higher here? It's been sort of a mixed bag when you look in the financial sector. Certainly Bank of America has been the star performer, but it quickly became extended in price. You can see Bank of America, another new 52-week high today, up 3.4%, outperforming nicely, $10.94 the last on BAC, but the breakout was over $10 a share. So we talk on my show often about not chasing stocks, not chasing performance. It's easy to do when you're buying technically strong stocks, especially stocks showing price momentum like Bank of America. But the buy point here was $10 a share, and at $10.94, it is close to becoming 10% extended past that last entry point at $10. So I wouldn't chase it up here. Let me go ahead and find a chart that's got the 10, 20, and 50-day moving average here, and I'm going to put BAC, see if we can see where some short-term support levels are. For Bank of America, if you're watching on Tiger TV, the 10-day moving average at $10.52. That would be the first support level. Underneath that, call it about $10 a share. $10.13 would be the 20-day moving average, and then underneath that, the 50-day line all the way down at 967. So these are support levels to watch for Bank of America. Other financials looking pretty solid here. J.P. Morgan. J.P. Morgan Chase also near the top of a base here, pretty much within 1% of a 52-week high. Good base taking shape here. Not really under meaningful accumulation here, but the fact that it's up near its high means that a breakout could be in the cards. J.P. Morgan up 40 cents today, 0.9% to 43.21. So they are two top holdings in the XLF, JP Morgan Chase and Bank of America. Another top holding in that fund is Wells Fargo, but it's actually kind of a lagging stock in the financial sector. It is having a pretty good day today, up 3.7% to 34.36, but it still has a ways to go to get back to its prior high, close to, was that $37 a share, thereabouts. So J.P. Morgan and B of A look to be a couple of the stronger stocks in the financial sector. Let's take a look at semiconductor stocks today, see if they are participating in this rally, and they are not. The Philadelphia Semiconductor Index down 27 cents to 380.76. I was just reading something over at investors.com, IBD's companion website over there. They said that Qualcomm is now the number 3 semiconductor vendor in the world, behind Samsung and number 1 Intel. That's according to new research from Gartner. Last year, Qualcomm was number 6. Gartner said out of the top 10 chip vendors worldwide, Qualcomm and number 9 Broadcom were the only ones to increase their revenue in 2012 compared to 2011. Not surprising there, because Broadcom and Qualcomm are iPhone suppliers. Let's check in and see what Qualcomm is doing today. A lot of big sellers in Qualcomm on Friday. Don't have any headlines as to what that selling was all about, but it is bouncing back today. Not nearly in as much volume as we saw Friday, but shares of Qualcomm up 2.7% to 61.42, and Broadcom still has a loyal following out there, even though it is technically a bit suspect here, not the strongest of stocks. Looking at recent price and volume trends in Broadcom, it is up close to 1% today to 32.37. Folks, don't forget about the Tiger Dollar promotion. I normally mention that at the top of the show, but if you purchase Tiger Dollars right now, we'll donate up to 10% of your purchase price to the Salvation Army. Sign up by December 19th, and you'll get a 25% bonus match on any amount you purchase over $500. You can use Tiger Dollars to purchase newsletter subscriptions, other premium educational services at tfnn.com. Basically, Tiger Dollars give you bang for the buck. It makes a lot of financial sense to buy them and to use them, because you save a lot of money, again, purchasing products at tfnn.com. So be sure to check out all the details on the homepage of tfnn.com. All right, taking a look at some other headlines today. President Obama and House Speaker John Boehner, they met again for 45 minutes today. You kind of get the feeling, get the impression, certainly watching the market reacting today, they seem to be making some progress here. Negotiations seem to be going a little better. I think it was over the weekend where we got news that Speaker Boehner said he's actually open to raising taxes on people who earn more than $1 million a year. President Obama wants raised taxes on people earning more than $250,000. So Boehner said, we could do $1 million, but only if significant entitlement cuts come in return. So yeah, there seems to be some negotiating movement, and we were talking last week about this market melt up, and that is exactly what's happening. It is kind of, my Ultimate Growth Stocks model portfolio is a long-short model portfolio, and I had 2 short positions on. I took profits in one last week, and I still have one open here. It's very tricky to be short here because there are a lot of stocks out there that technically look weak, stocks that are under distribution, stocks that just don't have good-looking charts. But it's tough when you just kind of feel like any minute there could be a deal out of Washington between now and the end of the year, and that could really result in a big market pop, which would make short positions not look so good. So the way the market's acting, it certainly seems to be anticipating some sort of agreement out of Capitol Hill. So like I said last week, it's not exactly easy being long in this market. It's not exactly easy being short either. And that is why I have definitely been very conservative. I don't own a lot of names in the Ultimate Growth Stocks model portfolio right now. I have 3 longs and 1 short. The 3 longs are all profitable, and the short is still profitable as well. But just kind of taking it slow, just kind of waiting for more signs. If I'm going to get more long, if I start to see signs that institutions are coming in from the sidelines. This says, again, it's been a market melt up. Their indices are not under meaningful accumulation here. To the Nasdaq's credit, like I said at the top of the show, volume is tracking higher than Friday here as tech stocks continue to do pretty well. The Nasdaq right now is up closer to its session high, now up 26 points, 0.9% gain to 2997. So maybe we get a close over 3,000 today. But just a lot of fundamentally and technically healthy stocks are still having a hard time getting going, and that's basically because there's not enough volume in this market to push them higher. Other headlines today: National Association for Business Economics, that's the NABE. They came out with a survey. They expect economic growth in 2013 of 2.1%, slightly below its projection of 2.2% growth this year. That is mostly in line with what the Fed is looking at as well. Also, a nice day for Caribou Coffee, CBOU. Let's take a look at CBOU. I think last check it was trading around $16 a share, and up 30%, trading near its session low, hits a high of 1664, last trading around 1604. Big gap up for Caribou Coffee. News here is that it's going to be taken private by a German conglomerate called Benckiser in a deal that values Caribou at $340 million or $16 a share. Remember in July, Benckiser acquired Peet's Coffee and Tea for close to $1 billion. So Caribou Coffee having a good day. And I got to tell you, these coffee stocks, I remember Green Mountain Coffee Roasters left for dead not that long ago. Company came out with outstanding earnings in November, big gap up, and it is holding gains nicely. Stock under a little pressure today, down 3.2% to 39.02, but by and large, shares have really been in a nice accumulation phase, and Starbucks SBUX working on the right side of a base as well. We'll be right back, folks.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure, 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. Happy holidays from TFNN. Our most rewarding Tiger Dollar sale is back this December at TFNN. Normally, we offer only a 10 to 20% bonus on Tiger Dollar purchases, but through December 19th only, when you purchase Tiger Dollars to spend on any of our products, you get a 25% bonus on your purchase, and up to 10% of whatever you spend will be donated to the Salvation Army in your name. You'll receive a personalized thank you letter directly from our local Clearwater Salvation Army administrator in appreciation of your donation. Tiger Dollars can be used on any of our newsletters or subscriptions, never expire, and are fully transferable. Take advantage of our most rewarding Tiger Dollar sale of the year right now. Visit TFNN.com for all the details and to make your purchase today. Happy holidays from TFNN. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, everyone, to Breakout Investing on TFNN. Ken Shreve with you. Don't forget, folks, 30 days free of Ultimate Growth Stocks right on the homepage of TFNN.com. Just click on the Newsletters tab at the top of the page, then Investment Newsletters. You can read all about Ultimate Growth Stocks there. Check out 30 days free. Right now, like I said, my model portfolio is definitely kind of conservatively invested at this point, but we've had some nice profitable trades in recent weeks, and really still kind of looking at this as like a trader's market. I typically don't like to scalp and move in and out of stocks quickly. That's not my investing style, but we live in a volatile times where sometimes taking quick profits in a stock is not bad strategy, because with market action the way it is, whipsaw action, big gains can disappear pretty quickly in a stock. So we're talking about some of these coffee stocks that continue to do well. Green Mountain Coffee Roasters, nice earnings. Stock continues to show relative price strength. And then right before we went to break was talking about shares of Starbucks. And on Tiger TV, I've got a weekly chart for Starbucks up. And classic example of a big base that's forming here. Started earlier this year in the springtime. It has started working on the right side of its base. It's back above key support levels. Last trading around 54.47. So this one seems intent on retesting that prior high around 60. We'll see. We'll see what happens. But Starbucks is another one of these. What I would consider a late stage base out there. In other words, you look back since the start of the bull market in March 2009. It was about a $9 stock. Split adjusted. I think that's a split adjusted, but it was about $9 stock back in March 2009, and now it's 54. So it's made a pretty big run, but this is one that still could work. Certainly, it is starting to show. It's been showing relative price strength for some time. So this is a base that could keep working its way higher, building the right side, and you could get an ultimate breakout in Starbucks. So we'll continue to monitor how that base takes shape. And then another newsworthy stock today. Let's take a look at shares of CompuWare, CPWR. News here is that Elliott Management, which I believe already has an 8% stake in CompuWare, they offered to buy the software company for $2.3 billion or $11 a share, and you can see a big move today. CompuWare up a little more than 13% to $10.78. All right, part of the NASDAQ's strength today. Let's take a look at Apple. Apple hit an intraday low today of 501.23, but it has bounced back. It is up $4.37 now, 0.9% to 514.16. Some headlines for Apple over the weekend. The company said it sold over 2 million new iPhone 5s in China 3 days after its December 14th launch. That said, Citigroup downgraded Apple today, lowered its price target to $575, citing rising iPhone tablet competition. Remember, on Friday, UBS downgraded Apple and cut its price target to $700 from $780, citing concern that growth may slow for the iPhone and iPad. And Friday, Jefferies also came out with a note saying that component suppliers have received order cuts in the last 24 to 48 hours. So what's clear about Apple is that the market is still kind of struggling with demand here. What are these numbers going to look like in January? You have to think, with all the technical destruction that has occurred in Apple basically since late September, early October, the waves of institutional selling in the stock, there's obviously some concern about what these earnings are going to look like when the company comes out in late January. So we'll have to see. This is a stock that I am not even remotely interested in owning down here. I've been very clear about that for several weeks now. So, but it does get talked about a lot. There is this obsession with Apple, but I tend not to be interested in stocks that are being liquidated by the big boys, and that is definitely what's been going on with Apple. Now, Google is kind of a different story here. Shares of Google definitely perking up. Similar to Starbucks, it's kind of working on the right side of a base here. Big sellers in Google back in October, but it is back above its 50-day moving average. Stock is up $17.18 today, 2.5% gain to $719.14. Some looks like this 2-year federal investigation of its web search business may be coming to an end. We'll talk about that when we come back. Breakout Investing on TFNN. We will be right back.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Ken Shreve back with you. Breakout Investing. Oh, that's the... let's see, Bob's Burgers from Fox television series. I was having a conversation over the break with my producer about In-N-Out burgers out here in California, one of the best burgers around. But Al's a clever guy. I know that theme song, Bob's Burgers. Good job, Al. Anyway, yeah, you come out to California, In-N-Out, that's the place to get your hamburgers out here. All right, let's check in on the markets here. About 25 minutes left to go in Monday's session. We've got the Dow right now up 72 points, 72 and a half, make it 75 points, 0.6% gain for the Dow, 13,210. If you're watching on Tiger TV, let's put up these index charts here. There's a look at the Dow trading up near its session high after hitting an intraday low of 13,134. The S&P 500. See what we're doing there. All right, come on, Ken. S&P 500, there she is, up near its session high as well, respecting its 50-day moving average so far, up 12 points, a little more than 12 points, to 1426, and the NASDAQ Composite. See what the NASDAQ Composite is up to. It is also near its session high, up 26.5 points, 0.9% gain there, to 2998, just 2 points below that 3,000 level. All right. So we're talking about shares of Google. Let's go back to Google because that last break came up pretty quickly on us. But shares of Google outperforming nicely today. You know, this stock could do well in 2013. There's about to be what is rumored to be a significant layer of uncertainty lifted around Google. For the past 2 years, they've had the Federal Trade Commission has been investigating the company's web search business. The company was basically under investigation for biasing its search results to favor its own services, and apparently Google has, as part of the agreement, Google has agreed to voluntarily refrain from a practice of screen scraping, where Google copies summaries of product and restaurant reviews from other websites and includes them in Google search results. So there was some concern that this investigation may not go in Google's favor, but looking at the stock's reaction today, this FTC investigation could be coming to a close shortly. So Google having a good day, outperforming nicely. Another stock working on the right side of a base here. So I like to see the base building going on here. When stocks build the right side of bases, it can sometimes pave the way for meaningful technical breakouts when volume starts to return in the market and institutions come back into the market in spades. Technical breakouts from well-formed bases are the fuel for the rally. So Google mentioned forming the right side of a base. Starbucks forming the right side of a base. Shares of LinkedIn, which I still believe has the potential to be a leader. It too is working on the right side of a base. Still, far off its recent high around 125. It's last trading at 114.16, up a little over 1% on the day, but and it's back above its 50-day moving average. That's a positive as well. But these bases need more time to complete. And at least in LinkedIn's case, this is another stock that is just not showing meaningful signs of accumulation yet. So just another one to keep an eye on. These bases need more time to complete. Akamai, another newsworthy stock today. Stock is up 1.5%. Technically very strong here. Still hasn't made much progress trying to break out over $40 a share. It's up 1.5% to $39.53. The news today is that co-founder and chief scientist Tom Layton was named as the company's CEO. Let's take a look at a weekly chart for Akamai, and you can see it's just been trying to break out over this $40 price level to no avail. And that's the thing about this market. There have been some. Breakouts. Some are working. The vast majority are just kind of, treading water and having a hard time getting going again. That's not surprising when the big boys aren't playing, and the big boys are not playing yet in this market. Hopefully, when the calendar turns, they will. But that remains to be seen, because this rally that started in mid-November it hasn't exactly been the strongest of rallies. It's been a low volume rally. It's been a melt up type of rally. There are some stocks out there that are working, but there are just as many that aren't working that are working, and that just makes for a tricky environment. Take a look at economic data this week. We did have the latest reading from the Empire Manufacturing Index came out earlier today. This was the December reading, and it was very disappointing. It came in at negative 8.1. That was well below the estimate for a reading of positive 2. In November, it came in at minus 5.2. So the Empire Manufacturing Index comes in much worse than expected. No data tomorrow, but Wednesday we've got housing start. They're expected to fall 21,000 to 873,000 units. Thursday we've got weekly jobless claims. The final estimate to third quarter gross domestic product expected to come in at positive or 2.7% growth. That would be unchanged from the second estimate. We've got existing home sales on Thursday, and the Philadelphia Fed, another regional manufacturing survey. Investors will be looking for much better news in November. This index came in at minus 10.7. So estimate this time around is for a reading of positive 1. And then Friday, personal income and spending, and the final reading on Michigan consumer sentiment for December. All right, taking a look at some other movers today. Let's take a look at SodaStream. A lot of people saying that SodaStream could have a big holiday shopping season, and maybe the stock's relative price strength, the fact that shares have been under accumulation for several weeks now, is perhaps in anticipation that a lot of people are buying the soda making system for holiday gifts. Anyway, SodaStream up 7.6%. When I went on air, I had not yet found any news as to what is driving this breakout today, but there's good volume in the stock. It's up $3.09 to $43.65. This stock is not for the faint of heart. It moves. It can move all over the place. It's a very volatile stock, but you have to give SodaStream credit because the stock definitely has its detractors. A lot of people saying that this business is not sustainable. It's a fad. People are going to get sick of making soda. And it's only a matter of time before earnings and sales growth starts to slow. But when you look back in recent quarters, soda has delivered very, very strong growth and a very consistent track record of execution up to this point. Short interest is relatively high. It hasn't been going higher. It's kind of been staying right where it is for a few months. But as of November 30th, 8.9 million shares were held short here. So that's a fairly significant short position, considering that its average daily volume is about 800,000 shares. So that would that would give it a days to cover ratio of close to 10 thereabouts, which is on the high side. But nonetheless, a good day of trading for SodaStream. Remember, Boston Beer last week had very positive earnings guidance for the rest of this year. You had a big gap up on Thursday. The stock followed through a little bit Friday, and it is up big again today, up another 3.5% to 137.09. And a lot of people are afraid to buy a gap up. If you had bought this gap up, you'd be sitting in a nicely profitable position. So good follow through for Boston Beer after bullish earnings guidance late last week. Home builders participating in this market rally. Let's take a look at the ETF that tracks the home builders here, the iShares Dow Jones U.S. Home Construction Index Fund, up 3.5% today to 2094. It too is flirting with a little breakout here over 21. Looks like would be a swing point. The highs put in over here in late November, early December. Volume picking up nicely from Friday's level, so good technical action in the ITB today. Inside the group, specifically Ryland Group, also seeing pretty decent volume today. You've got a nice breakout for Ryland today over $35 a share. Last trading at $35.74, up 6.3% on the day. This is an example of a breakout that is where a stock is not yet extended. So this is a bullish day of trading for Ryland Group, but you're not chasing it here because the swing point was right around 35 at 35.74. It is well within that 5% threshold. You don't want to chase a stock when it moves more than 5% past a swing point. So Ryland Group very strong today, trading right at its session high, and some decent juice in this stock as well. Take a look at this is Fiserv was on my screen today. I like the fact that it's holding gains nicely after after a big move. You can see here about a week, one or 2 weeks ago. It's up 46 cents today to $80.13. And I think I've got a weekly chart for Fiserv here. Nope, I don't. Okay. Well, the daily chart will suffice. But anytime you see a big, heavy volume move like that, and the stock, just unwilling to give up any gains, it's a positive sign. So now, what we want to do with Fiserv is also take a look at key support levels here. So let's take a look at the 10, 20, and 50-day moving average for Fiserv, and we'll see that the 10-day moving average is at 79.79. It touched that support level today, is trading slightly above it now. Then you have to go down to 77.60. That would be its 20-day moving average, 50-day line around 75.75. So strong performer here, and with financials acting as good as they are. This is a company that provides technology products to the financial industry, so it's sort of a ancillary play on the financial sector. Still watching Biogen IDEC here, BIIB, another example of a base building stock here. You actually have a swing point in Biogen of 155.30. So this could, arguably called a cup with handle base. Handle area forming here for 4 days. Your swing point would be the high, again, of 155.30 set last week. So not out of the question that Biogen could try for a breakout here shortly. The stock is up 99 cents today, 0.7% gain to 152.24. I think, as far as I know, I don't think it's been delayed, but we should be hearing from the FDA in the not too distant future about the company's oral multiple sclerosis treatment BG12. This is it's not an injectable MS treatment. It is oral. You take a pill. This could be very, very big revenue growth for Biogen. Late-stage trial results have been very positive for BG12, so should be hearing from the FDA sometime soon. I thought it was going to be sometime before the end of this year, so we'll have to check on that. Some of these data center service operators, I know I mentioned last week INXN, a company called Inversion Holdings, also working on the right side of a base here. The data center operators look very interesting here. So INXN is a lesser known name in the space. EQIX is probably or arguably the institutional quality name in the space, also seems intent on retesting a prior high around 210, working on the right side of a base here. So this is what's interesting. You've got a lot of bases forming here, and once this market sorts itself out, and this the financial cliff gets sorted out, and the market reacts to it, some of these stocks building the right side of their bases could ultimately try to break out. So Equinix is a stock that was looking pretty vulnerable not that long ago, but the market is saying that this is one still to watch because it is, again, forming the right side of a base, and you would just want to keep an eye on stocks building bases at this point. Deere is another one we mentioned last week. John Deere, ticker DE on the New York Stock Exchange. It is holding near highs, holding above its 50-day moving average. Swing point for Deere is going to be 87.50. That would be its high set here late October, early November. Deere is another stock that is consolidating gains in healthy fashion. The gun maker Sturm Ruger under a lot of pressure. Institutional selling continues in spades today for RGR, down 3% to 44.18, and also SWHC. That would be the other big one, Smith & Wesson. Big sellers in that stock as well. You can see it's really been taken to the woodshed over the past 6 or 7 trading sessions. Trying to hold on to its 200-day moving average does not look good here. Big sellers in the stock again today. Smith & Wesson down 5.1% to $8.66. All right, headed into our final break, folks. Ken Shreve with you on Breakout Investing. We're going to take a look at some earnings reports this week when we come back. We'll be back in about 3 minutes.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Welcome back, everyone, to Breakout Investing on TFNN. Ken Shreve with you. Let's check in on Rackspace hosting here. Kind of a disappointing day for the stock. You do have above-average volume today for Rackspace. It did try to break out over a swing point of $70 a share earlier in the day. It hit a high of $70.37, but it's down near its low. And when you have a reversal like that in heavy volume, doesn't mean you got to completely give up on the stock, but it's very disappointing action. And frankly, this has kind of been the rule, not the exception. These stocks trying to make headway, high-quality growth names, just not having a whole lot of success in a market that is not under accumulation. So again, it's not surprising to see price action like this. There have been some breakouts that continue to work. Salesforce is one. CRM had a nice breakout last week. Stock is holding on to gains, but it's really been such a mixed bag. It's seems like for every 10 that you buy, 5 are going to work and 5 aren't, and you end up just spinning your wheels. But I suspect if we do get into a market environment where new money does start to come in from the sidelines, and this bull market maybe has another leg up here, you should see much better technical action in a lot of these growth names that we tend to talk about on Breakout Investing. Surprisingly, it's a pretty busy week of earnings this week as we head into the Christmas holiday and New Year's. Let's take a look at shares of Oracle. They report tomorrow, I believe, after the close. The stock is up 29 cents today, 0.9% gain to 32.25 ahead of the report. And Oracle is actually not far at all from a swing point here. Call it 32.50 thereabouts. What you actually have here is a little cup with handle pattern, a little handle area forming here. Yes, action a little bit volatile in the handle area, but still, this one is setting up for a possible breakout higher. We'll see what Oracle has to say when it reports tomorrow. Then on Wednesday, FedEx had one of their busiest package delivery days. When was it? Last Monday. FedEx still, not exactly a picture of technical health here. It is working on 3 straight gains here, up another 1.1% today to 91.10. FedEx reports on Wednesday. Accenture, ACN, another stock building a nice base here. So market seems to be optimistic about the company's earnings report on Wednesday. This is obviously a consulting firm, but working on the right side of a base here, and this is exactly what a base looks like. You see the correction that started in early October, hits a low around 65, has worked its way all the way back close to its prior high around 72 thereabouts. So we'll see what Accenture has to say on Wednesday. Also on Wednesday, we've got Bed Bath & Beyond. This is a pretty well-run retailer. Technically, it has really been hit hard here. You can see it's up 1.3% today to $58.99, but back in September this was a $70 stock. So don't follow it closely, but there might be concerns just about growth going forward here. Usually when a stock goes from 72 down to $58 a share, there's some concern about fundamental weakness going on. So Bed Bath & Beyond reports on Wednesday. And then Thursday, a very, very busy day. Research in Motion. This stock is just under a tremendous amount of accumulation. $9 stock back in November. Now it's a $13.90 stock. Has totally outperformed Apple. So Research in Motion on Thursday. We've also got Red Hat, Nike, whole bunch of earnings this week. I'll see you back here tomorrow, folks, 3 o'clock Eastern for another edition of Breakout Investing. Thanks, as always, for listening. Tom O'Brien Show next.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.